Hey there, it's Athena. Did you ever wonder whether you should get a HELOC or do a refinance and you didn't know how to figure out what's worth it? Is it worth it? When is it worth it to refinance versus just getting a HELOC? So my theory is if you need 50,000 or less, you do not need to refinance, especially if your interest rate is low. But there's a certain tipping point at which the second loan or the HELOC or the fixed rate second that you're getting is so big that it makes sense to refinance. So I had a cool new tool added to my website. Here we are, Athena Paquette's website. We go to resources and go to blended interest rate calculator. I added this because this gives you a clear visual on whether it makes sense or not. So a blended rate or weighted average blended interest rate is something where the interest rate between the first mortgage that you have, let's say at 3.5%, and all the debt that you have, what is your blended rate between all that? Because your mortgage could be very low, but those credit cards can be really high. Or maybe you know already you want a HELOC and you're thinking how big of a HELOC becomes too expensive, right? So we'll put the first mortgage. Let's just say you owe 400,000 on that one. And then let's say you have 3.5% interest rate from 2020. Okay, and then let's just call it credit cards. You know, credit cards are very high in interest, so but you might have a car loan, you might have other debts that are lower. So let's just say you owe 200,000, or maybe you need 200,000, and let's say it's an average of 20% on the credit cards. So that's giving you a blended rate of 9%. Yes, you owe a lot of money at a lower rate, but you're owing a lot on credit cards at a very high rate. Let's say you don't have credit card debts. You're just thinking of getting a HELOC. And HELOCs are at about 7.5%. So that gives you a 4.833 interest rate blended between those two debts, right? So when you owe, and let's just change this down to 50,000 so you can see what I mean. If I change it to 50,000, my interest rate between my very low first mortgage and my higher rate HELOC is still only 3.9. It's when you start getting into like the 150 range, maybe you're at 4.5. That's still lower than the refi rate I can get you today. So in this case, when I do this calculation, I would tell the client, you know what? Get a HELOC and let's just wait for interest rates to come down below the 4.5 so we can get you a lower rate. Now, keep in mind, HELOCs are adjustable rate mortgages and can go up. But let's say you have a lot of consumer debt and it's more like 200,000, then I would say a refinance should be considered more strongly. So anyway, I hope that's helpful. New calculator, go to athenapaquette.com resources. There it is at the top. Thanks for listening.